Interview questions and answers for accounting job. Accounting roles require precision, integrity, analytical thinking, and strong knowledge of financial principles. Employers look for candidates who not only understand accounting concepts but can also apply them in real-world business situations. Whether you are applying for an entry-level accountant, senior accountant, or finance-related role, preparation is essential. This guide presents the top 25 accounting interview questions and answers, each thoughtfully written to help you demonstrate technical expertise, problem-solving ability, and professional judgment during your interview. 1. What are the main responsibilities of an accountant? An accountant is responsible for recording, analyzing, and reporting financial transactions accurately. Key duties include preparing financial statements, maintaining general ledgers, managing accounts payable and receivable, ensuring compliance with tax laws, and supporting audits. Accountants also help with budgeting, forecasting, and financial analysis to guide business decisions. Accuracy, confidentiality, and adherence to accounting standards are critical. Their work helps organizations track performance, control costs, and remain financially transparent and compliant. 2. What accounting software are you familiar with? I am familiar with several accounting software platforms, including QuickBooks, SAP, Oracle, Tally, and Microsoft Excel. I have used these tools for journal entries, reconciliations, financial reporting, payroll processing, and tax calculations. Accounting software improves efficiency, accuracy, and compliance by automating calculations and reporting. I adapt quickly to new systems and enjoy learning updated tools, as technology plays a crucial role in modern accounting and financial management. 3. What is the difference between accounts payable and accounts receivable? Accounts payable represents money a company owes to suppliers for goods or services received but not yet paid. Accounts receivable refers to money owed to the company by customers for products or services already delivered. Managing both is essential for maintaining healthy cash flow. Effective accounts payable management avoids late penalties, while timely collection of receivables improves liquidity. Both are key components of working capital management. 4. What are the basic financial statements? The three basic financial statements are the income statement, balance sheet, and cash flow statement. The income statement shows profitability over a period. The balance sheet reflects assets, liabilities, and equity at a specific point in time. The cash flow statement tracks cash inflows and outflows from operating, investing, and financing activities. Together, these statements provide a complete picture of a company's financial health. 5. Explain the difference between accrual and cash accounting. Cash accounting records transactions when cash is received or paid. Accrual accounting records income and expenses when they are earned or incurred, regardless of cash movement. Accrual accounting provides a more accurate picture of financial performance and is required under most accounting standards. While cash accounting is simpler, accrual accounting better matches revenues with expenses and supports long-term financial planning and analysis. 6. What is depreciation, and why is it important? Depreciation is the systematic allocation of an asset's cost over its useful life. It reflects wear and tear, usage, or obsolescence of fixed assets like machinery and vehicles. Depreciation is important because it matches expenses with revenue, ensures accurate financial reporting, and reduces taxable income. It also helps businesses plan asset replacement and evaluate true operating costs over time. 7. What methods of depreciation are you familiar with? I am familiar with straight line, declining balance, and units of production depreciation methods. The straight line method spreads cost evenly over the asset's life. Declining balance accelerates depreciation in earlier years. Units of production bases depreciation on usage. Choosing the appropriate method depends on asset usage patterns and company policy. Each method affects financial statements differently and must align with accounting standards and business objectives. 8. What is working capital? Working capital is the difference between current assets and current liabilities. It measures a company's short-term financial health and ability to meet operational obligations. Positive working capital indicates sufficient liquidity, while negative working capital may signal cash flow issues. Effective working capital management ensures smooth operations, timely payments, and financial stability. It is a critical metric for assessing operational efficiency and financial risk. 9. What is the difference between gross profit and net profit? Gross profit is revenue minus the cost of goods sold, reflecting core production efficiency. Net profit is the final earnings after deducting operating expenses, interest, taxes, and other costs. Gross profit shows how well a company controls production costs, while net profit indicates overall profitability. Both metrics are essential for evaluating business performance and financial sustainability. 10. How do you ensure accuracy in your accounting work? I ensure accuracy by following standardized procedures, double-checking entries, reconciling accounts regularly, and using accounting software efficiently. I maintain proper documentation and review reports carefully before submission. Time management and attention to detail help reduce errors. When discrepancies arise, I investigate promptly. Accuracy is essential in accounting, as errors can affect financial decisions, compliance, and stakeholder trust. 11. What is a trial balance? A trial balance is a report listing all ledger accounts and their debit or credit balances at a specific time. Its purpose is to verify that total debits equal total credits, ensuring arithmetic accuracy in bookkeeping. While it does not guarantee error-free records, it helps identify posting or calculation mistakes. A trial balance is a key step before preparing financial statements. 12. What are journal entries? Journal entries are records of financial transactions in the accounting system. Each entry includes at least one debit and one credit, following the double entry accounting principle. Journal entries capture daily transactions such as expenses, revenues, adjustments, and accruals. Accurate journal entries form the foundation of reliable financial reporting and ensure proper classification of financial data. 13. What is the difference between internal and external audits? Internal audits are conducted by company employees to assess internal controls, risk management, and operational efficiency. External audits are performed by independent auditors to verify financial statements and ensure compliance with accounting standards. Internal audits focus on improvement, while external audits provide assurance to stakeholders. Both play vital roles in maintaining transparency, accuracy, and accountability. 14. How do you handle confidential financial information? I handle confidential information with strict professionalism and integrity. I follow company policies, limit data access, and never share sensitive details without authorization. I ensure secure storage of documents and use strong passwords for systems. Confidentiality is fundamental in accounting, as financial data impacts business reputation, legal compliance, and stakeholder trust. 15. What is GAAP? GAAP stands for Generally Accepted Accounting Principles. It is a set of standardized guidelines used for financial reporting in the United States. GAAP ensures consistency, reliability, and comparability of financial statements. It includes principles such as revenue recognition, matching, consistency, and full disclosure. Following GAAP helps companies maintain transparency and credibility with investors, regulators, and auditors. 16. What is IFRS? IFRS stands for International Financial Reporting Standards. It is a globally accepted accounting framework used in many countries outside the US. IFRS aims to standardize financial reporting across borders, making statements more comparable internationally. Understanding IFRS is important for multinational companies and global accounting roles. It emphasizes fair value, transparency, and economic substance. 17. How do you manage deadlines and multiple tasks? I manage deadlines by prioritizing tasks, creating schedules, and breaking work into manageable steps. I use checklists and calendars to track progress and avoid last-minute pressure. Clear communication with team members ensures alignment. In accounting, meeting deadlines is critical, especially during month-end and audits. Staying organized and proactive helps maintain accuracy and efficiency. 18. What is a balance sheet? A balance sheet presents a company's financial position at a specific point in time. It shows assets, liabilities, and shareholders' equity. Assets represent what the company owns, liabilities show obligations, and equity reflects ownership value. The balance sheet follows the equation: assets equals liabilities plus equity. It helps stakeholders assess financial stability and long-term viability. 19. What is cost accounting? Cost accounting focuses on analyzing costs associated with production and operations. It helps management control expenses, improve efficiency, and set pricing strategies. Cost accounting includes methods like standard costing, job costing, and activity-based costing. By understanding cost behavior, companies can maximize profitability and make informed operational decisions. 20. What are adjusting entries? Adjusting entries are made at the end of an accounting period to ensure revenues and expenses are recorded accurately. They include accruals, deferrals, depreciation, and inventory adjustments. Adjusting entries align records with the accrual accounting principle. They ensure financial statements reflect true performance and financial position before final reporting. 21. How do you handle accounting errors? When I identify an error, I first analyze its cause and impact. I correct it using proper adjusting or reversing entries while maintaining documentation. I inform relevant stakeholders if necessary and take steps to prevent recurrence. Transparency and accuracy are essential in accounting, and addressing errors promptly protects financial integrity. 22. What is budgeting? Budgeting is the process of planning expected revenues and expenses over a specific period. It helps organizations allocate resources efficiently, control costs, and set financial goals. Budgets serve as benchmarks for performance evaluation. Effective budgeting supports strategic planning, improves financial discipline, and helps organizations adapt to changing business conditions. 23. What is financial forecasting? Financial forecasting involves predicting future financial performance based on historical data, trends, and assumptions. It helps businesses plan investments, manage risks, and prepare for growth. Forecasts guide decision-making and strategic planning. Accurate forecasting supports budgeting, cash flow management, and long-term sustainability. 24. Why is reconciliation important? Reconciliation ensures that internal records match external statements, such as bank accounts. It helps identify discrepancies, errors, or fraud. Regular reconciliation improves accuracy, transparency, and financial control. It is essential for maintaining reliable records and preparing accurate financial statements. 25. Where do you see yourself in 5 years as an accountant? In 5 years, I see myself as a skilled and trusted accounting professional, possibly in a senior or specialized role. I aim to expand my expertise, earn professional certifications, and contribute strategically to business decisions. I want to grow within an organization that values integrity, learning, and innovation while making a meaningful impact through accurate financial management. Accounting interviews test technical knowledge, accuracy, ethics, and problem-solving ability. Preparing well-structured answers helps you demonstrate confidence and professionalism. By understanding core accounting principles and applying them practically, you position yourself as a strong candidate. Continuous learning and integrity are essential in this field. With thorough preparation and clear communication, you can successfully secure your desired accounting role and build a rewarding career.